Let's take a deeper look at STRK, which is a preferred convertible stock by MSTR. I think when this came out, it was unique, it was different, but I think the part that I didn't get until fairly recently was its potential. So let's take a deeper look. It has a bond-like floor price, and that is based on the income yield. So it pays an 8% annual dividend on the 100% par value. So if it is trading at $100, it pays an 8%. If it trades higher because it's trading on the open market, then that yield goes down. The effective yield is based on the price. So if the price goes under $100, which it was at a point, then the yield would actually be higher. So part of what you're buying here is this dollar denominated quarterly paid dividend amount of 8% on the $100 share price. What's interesting about this is this has a self-repairing mechanism. So if the price of strategy starts to trade lower, the yield goes up, and then individuals and institutions that are seeking this product for the yield have more of an incentive to buy it. So then they come in and buy it because the yield is higher, the effective yield is higher, which pushes the price back up and basically starts to repair the price. So it's always going to fluctuate and have this sort of bottom based on the effective yield that it pays. Now, the very interesting and unique part of this, the part that interests me, is the embedded call option. So one strike share converts into 0.1 shares of MSTR common stock. And so the implied conversion, if you buy this at the $100, is $1,000 common stock share price. That's when it starts to make sense to convert it. But I'll explain further why it basically never makes sense to convert this, which is also very, very unique and interesting, and why I'm personally interested in it. So you would need 10 shares of this to convert into one share of MSTR. And if they're $100 per share and you have to buy 10 of them, that costs you $1,000 to buy essentially one MSTR share price. MSTR share price is currently trading $380. So it makes no sense to convert at this point, but we'll get into what it means in the future. So as MSTR starts to climb to that $1,000 mark, the embedded call option starts to activate higher and higher within the strike offering, because it's getting closer to its basically being able to convert in the money. And it's going to start trading more and more like a growth equity. So there's sort of this balance. Part of this instrument trades as the call option value, and part of it trades as the bond-like instrument value, the interest income paying instrument of the value. So the combination of the two becomes very interesting and is dynamic. So it's dynamic based on interest rates. It's dynamic based on MSTR share price going up and affecting the call option that's embedded in this. So what happens basically is the conversion is break even at $1,000 share price, and Strike begins to price in the upside potential at that point. Say at 1,200, the conversion is in the money, and Strike rises significantly with MSTR. It starts playing directly in line and a lot more has the correlation with MSTR. Now, I think what's going to happen is it's not a linear thing. It's not like Strike is going to trade around $100 until MSTR hits 1,000. As MSTR starts to climb to 1,000, the Strike price is going to start rising as well and be more in line with the call option that's embedded in there. Now, there is a caveat with that, which is the open ATM. So the at the market offering that MSTR has, or strategy has, where they can issue new shares of Strike. And when they do that, that creates selling pressure because they're selling those into the market, and that's going to lower the value or lower the share price of those shares. So as they do that, there's going to be more incentive for them to hit the ATM on Strike as the price of it goes up, because they're acquiring more money. They're paying less effective yield to acquire the capital that somebody pays to buy Strike, and they can use that capital to buy Bitcoin. So what I'm saying here is that the market will anticipate this shift. However, there will be the added selling pressure of the ATM as Strike goes up and up and up. But there's going to be a point where the ATM no longer becomes effective. And that is when the market is valuating Strike higher than they're valuing MSTR. There ends up being a point at the conversion rate. It doesn't make sense for Strategy to issue more Strike shares because they can convert into MSTR, effectively diluting, and there's also this dividend fixed amount that they have to pay. So it ends up making more sense for Strategy to actually issue common shares at that point than it makes sense for them to issue Strike. So then there's no effect of the ATM on Strike, and it can continue to raise in value based on the factors that dictate its growth, which is MSTR share price, the interest rates, market demand for yield versus growth, credit and default risk of MSTR, and Bitcoin's price, as it's indirectly correlated to that as well. So in my opinion, when Strike starts trading close to its conversion price, what's going to happen is people are going to recognize that this is actually a better thing to own than MSTR on multiple different levels. So here are the levels. The level is that it's higher up on the capital stack. So it is higher up in the potential event of a liquidation. There's more likelihood that it would receive anything, or you would receive anything, by owning it over owning MSTR, common share. So that means that there's less risk associated with it on that level. The other thing is that there is potentially a point, again, where there's no ATM issued on it, which means that the liquidity is going to dry up, the artificial selling pressure is going to dry up, which means the price can fluctuate, a lot. And really, there will be buying pressure, but no selling pressure, when there will still be an ATM open up on the underlying share price. Of course, these two things are connected, but again, there's no direct ATM on Strike. At that point, it doesn't make sense to have that ATM on Strike, even if it's still open. At that point, it starts trading very similarly to MSTR share price, and it pays a dividend on top of that. So it's like owning the MSTR, but you're being paid a dividend on top of that, which you could roll into. You could lower your cost basis with that dividend. You could buy more of it. You could set up a drip. You could do all sorts of things. And I think that's when this preferred stock becomes preferential. It becomes more profitable to own it than it does to own the common share, because there's more variables that can affect it, and it trades as its own instrument. And again, it doesn't have the ATM selling pressure, and it's affected by credit rating. It's affected by the Bitcoin yield a lot more than MSTR is. So I think at a certain point, there will be an understanding of Strike, and it will be closer to its conversion rate, but not at its conversion rate. And there will be a lot of people starting to get into that position. There's going to be a front running, in my opinion, up to the level of conversion. And then after that, the price is going to be, it's going to appreciate more than the underlying common stock. So Strike is an incredibly interesting product in my mind. I think it doesn't necessarily make sense to hold it yet, because of the ATM, because of where it is. I think I would treat, and I have owned Strike, and the reason I hold it is because I treat it like a cash position. I hold it instead of holding cash. I hold it instead of holding STRD or STRF, which is another thing that somebody could hold as cash. But I see the growth potential of Strike being much higher, and I don't mind the couple of % less to have the added benefit of this conversion premium that's built into Strike. So that's been a deeper look into Strike. It's an incredibly interesting instrument. There's a couple other videos I've done on the past. Some of the stuff I've reiterated here, but that's about it. Again, if you guys want to buy some Bitcoin, you can check out Bitcoin Well. There's a link in the description. And if you sign up using my link, you'll get free Bitcoin on sign up. There's also a link for BlockStream Jade hardware wallet, which is cream of the crop hardware wallet for preserving your Bitcoin. There's a Stampseed kit. Get 15% off using my code that's in the description for the Stampseed kit, and 5% off on a Start9 Bitcoin node. And you can book me for a one-on-one in the link in the description for any of your Bitcoin basic needs and all of that. So thanks everyone for watching. We'll see you on the next episode of Bitcoin, Not Crypto.